Good morning, Steve Free in Chicago with the morning grain comments. Overnight, we've got grain prices a little bit higher, led by the nearby May contracts. We continue to have the influence on the marketplace as we get into the May deliveries. There's not expected to be a lot of deliveries in U.S. cash. Domestic corn and soybean prices are above delivery values. I think that the main thing that the market has seen in the last week is extreme volatility. We've seen U.S. corn, soybean, meal, oil, and even wheat prices higher than export competitors. We'll be watching today's export sales numbers and see if they continue to be on the low side. The only market that seems to be seeing increased potential demand is corn. With the Brazil crop lower, we could see some increased imports of corn exports corn out of the U.S. And so that will tighten up that balance sheet. We also feel that the soybean balance sheet is tight domestically because of the higher crush rate. As far as what we see down the road, few of the bullish analysts have now turned negative. They feel that high U.S. prices versus the world could, number one, suggest futures are overpriced, and number two, we could see some imports in the U.S. There's already talk about a cargo of beans and a cargo of corn coming into the U.S. And right now, South American meal and oil is cheaper to come into the United States than U.S. prices. I don't think that changes the balance sheet a lot, but psychology would suggest prices may be too high. We also will be looking at weather. And it looks like the Northern Plains, Southern Canada, the Pacific Northwest will remain dry. But over the next week, we could see some rains across the central part of the Midwest. The Delta, though, is too wet. Our weather guy is watching pretty closely the Pacific water temperatures. The cooler they get increases the chance for a normal U.S. summer, and they are cooling down. So we need to watch that pretty closely. Those PDO numbers, if they turn warmer, would suggest ridging in the Midwest and dry weather. So we have to watch that pretty closely. In Europe, parts of Russia and Ukraine, it looks like rainfall is going to pick up for those areas, improving conditions there. Outside market stocks are up, crude's up, and copper is up. So it's kind of a mixture of the inflation concerns about increased raw material demand after people here in the United States are vaccinated versus the Fed keeping interest rates low and accommodating. So that helps the stock market. And I think commodity demand is going to go up. The question is just how much. As we look ahead in 21-22, we would expect that most world crop productions will go up, but demand could also go up, which means stocks could remain tight. So we're going to have to shift some of the volatility into the new crop December and November bean contracts. Historically, those contracts do not make their highs in April. They tend to make them in June. As always, these are my thoughts and not those of ADM Investor Services. Have a safe and profitable trading day. Remember, always treat people like you yourself would like to be treated.